So this video is about Qdoba Mexican Eats, which is a favorite of mine. Growing up in Northern Virginia, I used to go all the time. The menu hasn't really changed so much since growing up in Northern Virginia, where they have burritos, tacos, quesadillas. All the menu items are made to order, and they have a tiered pricing structure, so it gives flexibility to the customers. Most Qdoba locations also offer catering services, which helps expand the revenue streams. So you don't have to just rely on delivery and takeout, and as well as the customers that are coming in to the restaurant. Anthony Miller and his partner Robert Hauser first started Qdoba back in 1995 in Denver, Colorado. Miller had financial experience working at Merrill Lynch, and Hauser was in culinary school. They pulled their resources together, initially started a chain called Zuma Fresh Mexican, which later turned into Qdoba. Qdoba is the second largest brand in the Mexican fast casual space, with over 730 company-owned and franchise locations. And they do over $900 million in system-wide revenue. They were acquired by a pretty large private equity fund, Apollo Management, from Jack in the Box, a publicly traded company and a big burger chain, principally on the West Coast. They had a corporate carve-out, and the transaction was completed a few years ago in March 2018. Today, Andrew Jhawar serves as the chairman of the board and is a senior partner at Apollo Management. At the end of 2021, Qdoba had a total of 739 outlets. 330 of these were corporate owned, and about 406 are franchise. And it does seem that they're focused more and more on franchising, which is an asset-light business model, has been popular with a lot of private equity funds that are buying into franchise systems and prefer to grow the franchise route as opposed to corporately owned and managed locations. The fees that Qdoba charges for franchises are pretty standard, 5% royalty fee and 3% between local marketing and their nationwide marketing campaigns. And to open a Qdoba, it's going to cost you between $250,000 and $800,000 for a non-traditional location. So think in a school, military base, food court, airport, train station. For a traditional location, brick and mortar, this could be in a strip mall, end cap, it's going to cost you a lot higher, $476,000 all the way up to $1.1 million for one of their traditional locations. Franchisees must have a minimum net worth of $100,000, which isn't that bad. And I presume you're going to be using quite a bit of leverage if you're looking to open up even at the low end of $250,000. You're going to invest significant capital and probably use an SBA loan or potentially roll over your 401k savings, your retirement savings, to open up your Qdoba franchise. Qdoba franchise owners of one of their traditional locations can expect about $170,000 in salary and compensation. We get this from the EBITDA numbers that the company produces on their 333 locations, which is about at that $170,000 mark. And it's important to consider that your performance might be slightly different compared to how the company units are doing. Although the sales for the franchise locations are pretty in line, they don't disclose the full P&L for the franchise locations as they do for the corporately owned and managed. But they're operating at about a 13-14% profit margin, which isn't bad for food and beverage, and especially if you're just investing $250,000 or even $500,000 in this business, the payback is pretty attractive. So in terms of the franchisees that are operating the traditional locations, they're doing about $1.3 million, and the low is at $898,000. And then you have someone making nearly $4 million with their Qdoba restaurant. Imagine they're clearing $1 million in profit with that location. So imagine you invest $800,000 in a traditional location in a strip mall that includes the build out, working capital, furnishings and fixtures. Operating at a 13% profit margin with their average sales, you could expect a payback in about 5 years, which isn't that bad for food and beverage, especially compared to some of the other franchises that we recently looked at. So a lot of people are coming to Vetted Biz asking about Chipotle franchise. I'd say Qdoba is as close as you possibly can get to opening a concept like Chipotle. And if you want to get in that action of fresh Mexican food made to order, Qdoba is definitely worth looking at. They are closing corporate-owned stores, about 50 over the past 3 years. They have opened, though, 40 franchise locations over the past 3 years, which is a positive sign. They want to grow with franchising. They want to grow with you as a potential single unit or multi-unit operator. It's definitely a brand to explore. Be sure to talk to at least 5 existing Qdoba franchisees, as well as if you can get prior Qdoba franchisee on the phone, ask why they closed, ask why they sold. That's good to hear what has been working for existing Qdoba franchisees, as well as what did not work with past franchisees of Qdoba.